Hey everyone, welcome back to Corporate Decoder, the place where we decode the biggest corporate secrets and figure out if a company is really worth your hard-earned cash or perhaps just a shiny penny on the outside. Today we are looking at BTC Development Corp and their recent filing. This isn't just any old report, folks. It is about a company that has just rung the opening bell on Wall Street. We're talking about their initial public offering, or IPO, and what that really means for them and for investors. So grab your popcorn because we're about to break down all the juicy details. Before we dive in, if you love getting straight to the point insights from these dense corporate filings, make sure you're subscribed. And don't forget to join our Discord community linked in the description below where we chat about all things investing. So what exactly is this document telling us? Well, it is a report filed by companies to announce major events that shareholders should know about. Think of it like a company's diary, but with a lot more legal stuff. This specific report is about BTC Development Corp officially becoming a public company through its IPO. The company BTC Development Corp is based in the Cayman Islands. They've officially gone public on the Nasdaq stock market. This means their shares are now available for anyone to buy and sell. They celebrated this big milestone on the 29th of September 2025. Now let's look at what they are actually selling to the public. They V-issued units and each unit is a bundle. It is like a happy meal of stock for investors. Each unit contains one Class A ordinary share, which is basically a regular piece of the company, and then a quarter of a redeemable warrant. A warrant is like a coupon that gives you the right to buy more shares later at a set price. In this case, the warrant is for one Class A ordinary share at $11.5. They relisting these under the ticker symbols BDCIU for the units, BDCI for the shares, and BDCU for the warrants, all on the Nasdaq. The really big news here is the IPO itself. On the 1st of October 2025, BTC Development Corp put on its initial public offering. They sold a massive 25,300,000 units. And get this, the underwriters, the folks helping them sell the shares, bought even more, an extra 33,000 units to cover any extra demand. Each of these units was priced at $10. So right out of the gate, they raised a whopping $253 million. That is a truckload of money. To make this IPO happen, a bunch of agreements were signed. The main one is the underwriting agreement signed on the 29th of September 2025. This is the contract between the company and the investment banks like Cohen and Company, Capital Markets and Keefe, Briette and Woods, who are essentially the sales team for the IPO. There is also a trust agreement, which is super important for IPOs like this. It sets up a special account where a big chunk of the IPO money goes, basically held aside until the company achieves certain goals. Then there is the warrant agreement. This details all the rules about those warrants we talked about, how they work, when they can be used, and so on. It is crucial for understanding the potential future dilution of the company's shares. But wait, there is more. On top of the public IPO, they also did a private placement. This means they sold shares directly to a few select buyers, not to the general public. They sold an additional 760,000 units at the same $10 price, bringing in another $7,600,000. These were bought by some key players, including the underwriters and one of the company S sponsors, BTC Development Sponsor, LLC. This private placement was done using an exemption from registering these shares with regulators. When a company goes public, it is also a time for leadership changes and setting up the governance structure. On the 29th of September 2025, several new directors were appointed to the board. We have Betsy Z. Cohen, Bracebridge H. Young Jr., Jonathan Kirkwood, Andrew Hones, Grant Gilliam, and Hirsch Kozlov. These folks will now guide the company's strategy. Some of them have also been assigned to important committees, like the Audit Committee and the Compensation Committee, with specific chairs appointed for each. Alongside these appointments, the company also entered into indemnity agreements. This is pretty standard for public companies. It basically means the company agrees to protect its directors and top officers, like the Chief Financial Officer R. Maxwell Smeal, from certain legal liabilities that might come up as they do their jobs. They'll cover their legal expenses and protect them as much as the law allows. To become a public company, the company's foundational documents had to be updated. They filed an amended and restated memorandum and articles of association. Think of this as the company's constitution, updated to fit the needs of a publicly traded entity. Now, let's talk about where all that IPO money is going. A huge chunk, $253 million from the IPO and the private placement, has been placed into a trust account. This trust account is managed by Continental Stock Transfer and Trust Company, and it is there to protect the public shareholders. The money in this trust can only be used for specific things, like completing the company S initial business combination, which is essentially finding and merging with another company within a set time frame. If they don't find a target company within 2 or 3 years, the money is supposed to be returned to the shareholders. This structure is common for special purpose acquisition companies or SPACs, and it is designed to give investors some downside protection while the company searches for a business to acquire. They also included a press release about the pricing of the IPO. This is often where companies put out their official statements summarizing the good news, and another press release dated the 3rd of October 2025, announcing the closing of the IPO. Finally, the report lists all the exhibits, which are basically the attached documents referenced throughout. You've got your underwriting agreement, warrant agreement, trust agreement, and all those other behind-the-scenes legal documents that make a company public. So what does all this mean for BTC Development Corp and for you as an investor? Well, going public is a massive step. It gives them a lot of capital to work with, which they'll need to find a business to acquire. The trust account structure provides a safety net for investors, but the clock is ticking for them to find that right acquisition. The success of this company hinges entirely on their ability to identify and successfully merge with a promising business. The leadership team's experience will be key here. We need to watch closely who they acquire and how that business performs post-merger. The risks are clear if they can't find a suitable acquisition within the time frame, or if the acquisition performs poorly, investors might not get their initial investment back. On the other hand, if they find a great company and integrate it well, the potential for growth is significant. In conclusion, BTC Development Corp has successfully completed its IPO and is now in a position to pursue its acquisition goals. The journey ahead is all about execution and smart strategic decisions. For investors, it is a play on the management team's ability to spot value and make it grow. Alright, that is our breakdown of BTC Development Corp. Latest filing, what is your take on this IPO and what it signals for the company's future? Do you think they will find a great acquisition? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.